It's better now, yeah?
Yeah, it's better because you have like microphone, now it's better.
Okay.
Nice to see you
Hello,
again.
hello.
Welcome everyone. Welcome to a new podcast episode of Florin Carare, the business matchmaking guru. And we present now together with Wojtek Salski, we present now financial education for teenagers. Last episode of this series. Hopefully you enjoyed the series, and if you ever watch this series in the future, I hope you enjoy it and you saw a lot of value. If you have any comments or feedback, please do not be shy to leave some feedback about this. And in the future, let us know how we can improve. So welcome, Wojtek. How are you today?
Thank you so much. I'm just grabbing myself a glass of water with lemon. Thank you guys for having us. It's a pleasure to be here yet again. To everyone in the future watching this, I hope that we're as handsome in the future as we are right now. This is quite exciting, isn't it? This is the final episode of our series. Let's see what comes out of it. I hope to wrap it all together and sort of bring our listeners a little bit of overview of what happened here, maybe some actionable points, maybe some ideas for get away cat for the future for you to start with, and let's see where it takes us.
Yeah, and before we continue, please also Wojtek press the record button, because I forgot to invite you to do this.
Of course, yeah. Let's go.
Amazing.
Hello. Okay, so Florin, before people join, let's recap what we did. We started at the beginning with just introducing to people the idea of saving money in a matter that it's not saving the way that an average person would say. It's much more of an investing in or keeping in different assets rather than saving in cash. Because a big part of our webinars, I guess, is the idea of understanding that cash does not equal money. It's one of the opportunities to have money, but it's not the money itself. And maybe this is like the biggest point, really, because if you don't understand the difference, then you don't see the point of applying it to anything else. Then we've talked about the different options of investments, from small ones to the huge ones last week, and I hope that we've given a nice array of offer for people to educate themselves and choose from. What do you think?
Yes, indeed. And by the way, do not forget about the difference between money and currency. Either can be a fiat currency or a cryptocurrency. Actually understand what means money. Money means value, and a currency is based on trust. So if you trust in the government, it means that you like the fiat money. If you trust in the power of people, it means that you can also look into the cryptocurrency. It's important to understand the freedom of money, and basically what you actually own, not what you actually think you own.
Yes, and that's a big one, isn't it? Right now, especially with where the world is. I feel, for me, at least personally, this adventure has been quite life-changing, with the amount of knowledge that I've started to dig up myself, after hours, let's say.
Hello, Mikhail,
it's
welcome.
Huge. Hello.
Hey, everyone. Nice to see you, whole
hello.
family.
Nice. I know that Hania is back in Poland now, so let's see if she connects as well. I'm pretty sure she's quite busy. But we'll give you a moment, guys, to finish up your cooking, and we'll kick it off.
Amazing. I'm so excited about this episode, because basically in this one, we wrap it up, all the strategies that we talk about, all the understanding, how we can make sure that we understand a little bit more, because the school system does not teach us and the young generation about money. They teach you how to become a good employee, but not about how to become a good entrepreneur, how to become a good investor, how to be a wise one, and do not bite that in everything that is fly around, and make sure that you understand the differences. Hello, everyone. Hello, Mikhail. Hello, Tomek. Nice to see you. And welcome to the last episode of this series. Hi, Kuba. I hope your microphone works now. And nice to see you again, Kuba, as well. make sure that you have good connections and be strong and be powerful. How was
Oh,
your week?
always. Can you hear me, guys?
Yes, we can hear you
Yes.
loud
Oh,
and clear
nice.
now.
Perfect. My week was great. I went to Liverpool on Monday and Tuesday. They sent me on a conference from work, which was about like external quality assurance in the NHS laboratories. So there was a lot of knowledge just being crammed into my head, and I'm ready for that to happen again just
Very,
now.
very good. So did you also buy a ticket for Titanic?
No, but the conference was at the Titanic Hotel. I
You
found
see?
out that Titanic was never actually in Liverpool. I think it was just registered in Liverpool.
Yeah, and it left from Liverpool, and you have that place where everyone is putting a lot of small lockets to symbolize the power of love and to make so yeah.
To make
So
the
no.
risky the bridge. I heard about those bridges that have too many lockers, that
And
they
they just
actually have
collapse.
problems. Yeah,
Yeah.
that it's not safe. Hello, Tomek. How are you?
Hello. Yeah, I'm cool. I'm not really happy to be here just today without the two meetings before, but I was so strongly committed, and I'm still am to the theater group and the theater staff, and we've just started another play just from the beginning, so it really got me on all these Thursdays back then. But yeah, I'm here to hear the end and well, what's going to happen next.
Well, I'm so happy about this, and I'm hopefully that all of you will become influencers in your niche, and to make sure that you keep in contact after this series end, because I strongly believe that you will add value and you'll learn and you'll understand as well from all the books that we recommended, from all the strategies that we recommended. I think you have a lot of things to think about and to take action, because words without action is nothing. So it make sure that you start experiencing, because this is the age that you need to experience as much as possible, fall as much as possible, as fast as possible, and make sure that you learn while you fall. And what if you does not necessarily need to fall to learn, but is it just important to experience the things to understand, because all the big guys, they were like you at some point. So it's important to start somewhere and make sure that you are down to earth, and you fight a lot for your dream. Otherwise you'll fight for a dream of someone else.
Beautiful. So without further ado, I guess we'll kick it off. The plan that we're gonna go through is we'll review some of the main points of what we talked about with Florin, and then at the end we're gonna have a little discussion and also a little announcements, let's say. So Tomek, Kuba, turn off your cameras. Let's jump in. I hope that the guys in Michael's room can also hear us. I believe they do. Nevertheless, let's start. So I think, to start with, I kind of feel that the best point to begin with is to yet again reiterate that this is just the beginning, guys. You know, we've touched on different topics, we've scratched the surface, so to speak. But as we've discussed with Florin before, at the end of the day, you gotta educate yourself. And Florin pointed out quite clearly that, you know, we're young, so we have the advantage of having time to spend, to invest. And I think this is the first point. So Florin, what would you say out of the things that we can do? How can we educate ourselves in the matter of money?
Well, firstly, you need to understand what is the difference between money and a currency. And this is important to understand, that because whenever you are paid for something, you are paid in a currency, you are not paid with actual real money. It's important to understand that you are paid in a currency that is issued by a government where you live. And if you have trust in that government, and if you have trust that the government will not print any more money, which is not true, in this case, you should think twice what you are working. So what is the reason why you are doing what you're doing? So it's important to understand that you need to understand the difference between money, which have different forms, and which can be like gold, silver, or any like Bitcoin or any other or any assets like real estate, that this is real money because this is having a value. As well, you need to understand the difference between cash flow positive money and speculation money. For example, cash flow positive money can be an asset that is producing cash flow positive. It means that the money that you put in, the money that you get out from that asset is more than the money that you put in to have that asset, like an example maybe. Then you have a different kind of money, which is speculation money, and it means that someone else will be happily willing to pay a little bit more than what you paid for that thing, for that currency. Can be fiat currency or a cryptocurrency. So you need to understand this too. So, and then you need to understand as well that money is not a currency. So currency, you have two types of currency. You have fiat currency, which is issued by the government, and you have a cryptocurrency, which is private money, and which is private, are issued by private institutions, like maybe networks groups like Ethereum or any other kind of blockchain foundations. It's important to understand that in the blockchain sector, for example, you have a lot of foundations as a form of organization. This is where the power of many. So if we think about cryptocurrency, you should think of like the power of many, like the value of the power of many. If you think about fiat currency, you should think like the power of a government. But if the government is printing more money, it means that you have inflation. And if inflation is higher, it means that you lose money, you lose value over money. So it's counterproductive to be a saver. That's why it's important to become and educate yourself to become an investor.
Great, yes, and I guess the bottom line here for you guys is that we've talked about many sources. I'm gonna cite them at the end of this episode as well. I'm gonna put them in the description. There are many more to research. Myself and Florin, we also are constantly learning and trying new sources and seeing what we can do better. So at the end of the day, first make sure that you educate yourself, and secondly, try it out, see what happens, because as Florin pointed out, we're young, so we have time to make mistakes. Now, about making mistakes. Let's talk about personalities. I feel like this is a big part of the whole idea of money, because it's an emotional game for some, and I know that it is for me. So what did we mention before in terms of the personality traits, or maybe the personality types that you need to reflect on yourself to know whether or not you can? So what are the personality traits that we're talking about here, Florin?
Well, I think it's important to understand what kind of personality you are. You are a type of like a more risk-averse person, which means that you like stable things, or you are a person that is more adventurous and would like to take more risk. You have a clear balance between risk-reward. If you take more risk, in this case, you might have bigger rewards. If you take less risk, you might have less rewards. It means basically everything is paid accordingly. So that's why it's important to learn more about risk, and it's important to understand the risk before you take a decision. And it's important to understand, how do you react in case of panic? How do you react? Do you react like the crowd? Do you enter in the fear mode if the markets are down? Do you enter in the greed mode if the markets are down? If the markets are up, do you enter in a greed mode, or do you enter in a balanced mode? So it's important to make sure that everything you do, you take wise decisions, and as well you understand yourself, what kind of person you are, because everything, all the people that will give you ever advice, or maybe they will always ask you what kind of person you are, what kind of risk you prefer, because you are young. If I would be you, I would say that it's important to try and test as much as you can, because you have the time on your side, and then you understand, and then you choose a direction. You either choose to become a passive investor, it means that it's a lay down, definitely you have less rewards, or you either choose to become an active investor, and in this case you have more risk that you need to take into consideration, and in this case you need to educate a little bit more. Basically, all big fund managers what do? They take more risk on your behalf because you don't have the power, or maybe the mental strength. You don't have the mental strength to take those decisions. So it's important to understand that everything, it's about a decision game. If you don't take a decision, someone else will take a decision in your place with your money.
The interesting thing about decision making, I guess, is that not making a decision is a decision in itself as well, you know. And it's funny, guys. It just popped into my head. Whenever we give up the money to someone else to invest for us, what we're ultimately doing is we don't feel competent enough, let's say, or you know, knowledgeable enough to invest. But then the person that is investing for us is not investing his money. So first of all, their decisions are going to be much, let's say, much different than yours would be in terms of what is the most important factor, especially if they don't really care about your portfolio as much as they care about their pay. And secondly, that person might be able to withdraw from consequences, but that also means that the consequences will still touch you because you have invested the money. So I would argue that first, it is an advantage to try for yourself, because at least you're taking the accountability. And that way, the win is your win, the loss is your loss. Whereas if you give it to other people, the win is their win and a bit of yours, and the loss is yours because they are paid anyway. Okay.
So true. This is so true what you just said. Remember this all the times.
So in terms of the different ways of investing, I remember that we've spoken at some point about the idea you just mentioned, Florin, of learning from mistakes and not doubting your decision. So why, can I just ask you to bring back, why do you think a young person might be able to take more risks than an old one? Let's just put it out there. What was that about?
Well, let's think about like what we normally think about. Like if you think about like for the pensions, yeah. If you are a young person, you have plenty of time to think about the pension, and you should take more risks. But also, when you take risk, you should inform yourself before taking a decision, because taking more risk doesn't mean to take a decision, to take a risk without informing yourself first. And then you have plenty of time to do mistakes and then learn from those mistakes. And if you have more speed, so basically whenever you are an active investor, you have more speed in the turning up the money basically. And instead, when you are a passive investor, the time goes slower, because everything it's about, well, let's think about like two types of different kind of investors. One is an investor that is investing in stable assets, like bonds, like any other kind of assets, like maybe something that is quite steady, or maybe like gold, like silver, like all this kind that are pretty sure. But you don't have so much. Movement in the market. Whenever you have movement in the market, it means that you also have opportunities. You should think about the fear and greed index. Always look before taking a decision. If the market is panicking, and if you have some cash saving on side, that is the best moment to start buying in steps. You never buy all in one go. You buy in steps because the price might go down even more. In this case, you can buy even more with the money that you already have. And then you start selling in steps. So remember this, you buy in steps, you sell in steps. You never buy in one go and you sell in one go, because that point might not be the highest price on the market that you can have for your assets. Doesn't matter the asset type that you have.
That's so powerful, you know. The idea of buying in steps and selling in steps is something that I've discussed recently with Connor. We were talking in terms of trading sort of on a daily basis, but I guess it applies to anything. Unless you are committing to one big investment, for example, a house, and that demands of you to make that decision and to take the money to pay for it. If we're talking about small investments, or even putting money aside for your own business and putting it in, the idea of putting it into a smaller step allows you to take a moment out every now and then, instead of putting one big chunk and seeing it dissolve into nothingness. You can see a little bit, If it goes down, that's not a problem. You just
buy
put
more.
in a little bit, yes, a little bit more and try again. And at some point,
yeah, sorry for
Yes, sorry.
interrupting. Yeah, continue, and I'd like to add something else. Sorry.
okay, no worries. So the last thing I wanted to say is an interesting thing that I've learned about playing in, for example, betting in a casino, is that there is this technique of betting twice as much as you lost last time in terms of bringing it back. So if you've made the payment first and you lost, let's say 10, then next time if you bet 20, then that way you're gonna, this is some probability and statistics, and it's actually forbidden in many casinos to do as a way of ensuring that the person does not win back what they lost. So I don't know if this is here applicable, but it just brought back to this idea of it's not a loss unless you're still playing.
Yes, indeed. And always remember that you need to play with the money that you can afford to lose. This is very important to take this. Basically, don't never forget this. Do not become a greedy person or become a fearful person. Always the extremes attract a disaster. So always become that kind of balanced person. And it's important to look how the fear and greed index look like. And because you are young, I bring this back. It's important to start learning about trading, because this means active investing. Basically this means like speculation. Speculation is everyone thinks that is something bad. It's not bad, because basically at some point a price of an asset can be up really like double, and a price of an asset in a future, like in 1 week, can be like half of it. And if you become scared, basically if you have fear like everyone else have in the market, it means that you might lose an opportunity. So you always look into the opportunities in the market. Whenever a crash is happening, that moment is the best one to make some investments in any market, not just one type of market, in any market. Basically you should swim against the wave.
Yes, swim against the wave, swim against the current. Yes, and I guess at this point it's a good moment to reiterate the idea of learning from what you've done. And something that showed up for me, especially in terms of trading, is the note taking that you reflected upon at some point in our webinar. I think this is something that you should guys start from zero. I know that some people are already taking notes of our webinars. I would encourage you to take notes of anything you're learning about, because it is actually proven also to make your memory more likely to remember it. First hear it, then write it down, and then say it, and that's the most you can do, and then teach it to another. But especially in terms of the choices you make, if you don't write down the circumstances of the choice, you don't know if you've made it right or wrong. Even if you won a little bit, and I would say I would use the word won rather than earned, because if you don't know how it happened, then it's more a win than an earning, because you cannot redo it consistently. I think that this is a big part of it all, and also something that a friend of mine pointed out, and he's a big enthusiast of stock trading, stock investing, is have your papers in order. The same way as when it comes to your business, we talked about setting up a business, we talked about organizing your business. The same thing you have in your phone, things that you care about, that are important, make sure that you keep them in order. Do not store your passwords or your notes on a piece of paper and chuck it around the house, or stuck it in stick it into your drawer that you don't know where it is, because the notes that you're taking will be a reference point for you to make the better choice next time, or at least understand whether or not you actually did the right decision. So here, I wanted, Florin, to ask you a little bit of a personal question, I guess, in terms of the investment techniques and things you're using. But what have you been practicing in terms of those note takings, and maybe how do you organize yourself when it comes to investing?
Well, first of all, you need to learn about the value of the asset historically. You need to learn to look in the previous past, what was the value of that asset historically, write it down, then see the fluctuation over the time of the value of that asset. If you do trading, in this case, you look into the different waves, and you look also as well at the fear and index. You look also as well at the valuation of gold in comparison with the dollar, and valuation of the assets in comparison to gold, and valuation of the assets in comparison to silver. And you make a comparison between these between different kind of the assets, and also between currencies. You look in the past, you look what happened, how much was the value of that asset in gold, how much value was in silver, and how much value was in dollars. If you see that price of a house is increasing in dollar, it means that maybe the inflation rate of the dollar is really high. It means that it doesn't mean that you have more value. It means that the value is taken because the value of your money is lower. So basically, it's not about, and depends on how quick you want. You need to look also what type of investment you have. Is it a long-term investment? Is it a medium investment? It is a short-term? Because based on the different types of investment, you need to react differently, and you need to take different decisions, and stick with your decision no matter what. Basically, if you took a decision to be a long-term investment, in this case, keep it. But it means that you need to also look into different options as well, like what you have in that moment. Always look into the history and look at the background before making a decision, and make a comparison with other things that are similar in the market.
I think this is a huge part, and thank you so much for bringing it up. Actually, before I ask the next question, I just wanted to remind you guys, we've talked about different types of investments, from short term to long term, and the most powerful part for me from this, the takeaway, was the fact that the longer you wait, the more likely you are to break profitable. It's less risky, because if the market goes in waves, as it does for the past however long, it goes up and down as a cyclical. I like this word. Then in that term, the longer you're waiting, the more likely you are to break even or even up if it went down for whatever reason. And a big part of this also, I think, is to be flexible. It's not about fearing that you're going to lose, so you get out, or it's not about sticking to your guns when you're completely losing and you can see that this is just drowning yourself even more because you've used some options. But let's not talk about that, because you should not think about it for now. But if, for example, something is a short investment, and I remember, Florian, we talked about this in terms of the cryptocurrency, that if something is a short investment and in a short time, let's say a week, it actually goes down. Well, if you've invested money that you're not risking to lose in terms that you don't need them right now, you can wait another week. There is no problem. You can wait another 4 weeks. You can wait another month. Maybe you can even invest more, as we said, as you're waiting, because the price is going down. So it's a better moment to buy. And then at some point it will go up, one way or the other. And that's the advantage of having time. And I guess this is where we come back a full circle to our old versus young discourse, where the young people have more time, because if it goes down, we have more time to get break even and go up. Whereas if I invest my money for a week and I have only a week, well, that's a bit of a tricky question then. Let's think what kind of investment you're doing then. So
I would like to, before that next question, I would like to add here two things. Think about the pension. This is thing. So if you have short time until you get to pension, basically, if you are over 50, in this case, never risk the money that you have, because if you risk in shares, basically like S&P 500 or any other kind of index funds, in this case, you might lose. You don't have time to recover in case of the market goes down. But if you are a young person, you should take more risk in regards to the pensions, like an example, because you have time to recover, and always you do accumulation. Basically, from my examples, I always do accumulation. Basically, all the dividends that are paid from the shares that I have are reinvested to buy new shares in the same thing, because if you take the earnings of your shares with what you do, cash is dead if you don't do something with the cash that you have in your pension account. Like an example, I bring here the example of the pensions because it depends on your personal circumstances. If you are young, you should go for more opportunities, more risk. If you are more advanced, like over 50, in this case, you should take more balanced and quite take less risk because you don't have time to recover. And this will be the first example. The second example is in regards to the cryptocurrencies. In regards to cryptocurrencies, for example, you have a value that is like a market capitalization, the market cap, and you look at the liquidity of that cryptocurrency, and you look, okay, what is the historical value? What happened during the history? What can we improve? Because, for example, you can recover, and even more, always with something with a limited amount, something that is limited amount, basically, like you cannot produce more. I'll give you an example, a practical example, Bitcoin. It means that you have that limited amount and everyone is appreciating, because here is kind of speculation investment. Here is not an asset, is not a cash flow generating asset. This is about speculation. Basically, how many people would like to buy that asset, and if it's like respecting the law of supply and demand. If you have low supply and you have high demand, it means that the price of that asset, of that thing, it will go up. And you always have fluctuations. You have market is going up, market is going down. You always need to take care about waves, into economic cycles, and also need to take care about the macroeconomics. Macroeconomics means basically the change of power. If you look these days, what's happening in the world, that China and the BRICS countries are becoming stronger and stronger, which means that you should think of you should look what these economies are doing, what they are producing. So basically, I think that soon enough probably will assist to a very, very strong fight between dollars and yen, Chinese yen.
Yes, so this is obviously going a bit deeper, and then let's leave it at that. But a big part here that Florian mentioned is the reinvesting of dividends. For those out there that do not remember what dividend was, dividend is like let's say the income you can get from keeping an asset that is generating income. For example, if you have stocks in a company that shares a part of the revenue with the shareholders, you will be getting a certain percentage of the company's earnings every month, half a year, quarterly, yearly. I don't know if they are bigger than that, 10 years. I don't think so. I think
so. Normally you have like either some countries have every 3 months, some countries have only every 6 months and a year. But normally every country is like the general part, it is a yearly payment.
Yearly, I see. Yes. So I wanted to ask you before we continue further. I don't know if how maybe we could approach that, but I'm wondering in terms of the way that you keep your documents, something that I've been struggling to sort of figure out how to take notes of stuff. I just wanted to ask you, Florian, what have you been using? Are you using online some sort of tools on your computer to keep track of your investments, or do you have a notebook that you're keeping? How does it work for you?
Better a notebook, the classical way, because while you are writing, you remember the things. I prefer a notebook, because if you use digital technology, you can use it to create material, to create content. But for this kind of personal and this kind of important decision, always use a notebook. And any actions that you take, if you do trading, write about it. So write about it and do not doubt yourself. So if you took a decision, do not doubt yourself. So take that decision, see what's happening in the market, and then learn about the new economy, what means the new economy, what's happening what are the tools that you have into the crypto. I really love crypto. What are the tools that you have in the market? Because if you want, for example, if you don't have time to trade, do some staking, which means that you have a cryptocurrency and then you put it into a smart contract, and then you'll be paid in the same currency some coins, a value of some coins. If you don't have time, do staking. Instead of putting your money to saving, where you have 0.5% per year, some staking contracts are for 15 days, for 30 days, for 90 days, for 6 months, for longer, but usually more is like up to 6 months. Usually, the new economy, the new way of being paid for the values that you hold are changing.
Wonderful. Yes. So these are the things that we might dive deeper into as we progress in our education. I'm happy to also assist, and I know that Florin will be able to help us as well. So finally, as we're sort of halfway through, I wanted to talk about the spaces, let's say, and the sources that we can use to go for information. You've mentioned already the Fear and Greed Index. I remember we've talked about the actual tools, let's say the how do you say it? Graphs, diagrams of the different assets and their projections. And I wanted to ask, what other tools, what other spaces and sources should we explore?
Well, look at the CoinGecko. CoinGecko is about like the market capitalization of any cryptocurrency. Like an example, also look into the S&P 500 because S&P 500 is very well connected with the Bitcoin value, like the Bitcoin graphs. Whenever the S&P 500 is going down, the Bitcoin also is going down. But more often, it seems that Bitcoin is becoming stronger than the S&P 500. Basically, like it's becoming like more of a store of value, and it's a little bit more stable than the S&P 500 indeed, because the Bitcoin value goes like along with the S&P 500. And you look into the new economies, you look into the BRICS country, Brazil, India, China, what is happening in those economies. It's important to understand that in Russia, it's important to understand as well that more and more we have a change of a balance of power.
This is a big one, and I've been recently listening and sort of learning about the macroeconomics a little bit more. And this is something to definitely explore, guys. And I'm also going to share with you some links to different sources that I've been exploring. And, you know, feel free to find your own as well. There are plenty of people out there that are both for and against different ways of doing. So I think it's good to educate yourself in all of the ways. I don't remember who said that, but I've come across a quote that I think it was Jim Rohn, that you should read the books of people that failed to know what not to do, and books of people that succeeded to know what to do. Or at least he also said that if you know what people that are not successful are reading, don't read it. So it's important to know both sides of the story, or at least try to understand the different forces that are going around us, because at the end of the day, the amount of money you have in your pocket is not necessarily only up to you, especially not with cash, as we've pointed out multiple times. So now let's talk about the different bank accounts. I feel like this is a good moment to point it out. We've talked about different wallets, so maybe we can connect it. Different bank accounts and different wallets. What's this about, Florin?
Well, let's think about two things at the beginning: the emotional bank account and your bank account, your actually bank account. The emotional bank account is about your personality. Do you have enough strength to be a strong person in case of the market is down? Do you have enough? Do you become fearful if the market is going wild? Basically, the emotional bank account is very important, like your bank account. When we speak about physical bank account, you should think about two things. Firstly, the normal bank account. remember, any money that is in a bank account, it means that you don't have the money are not yours. You always can be left without access to your bank account because it's just a number in your application, in your app. And then you have the crypto bank account, you have the crypto wallets. Basically, the new economy, it's about crypto economy. It means that is the money that you have in your wallet, because you only have the password, the 24 words password is actually yours. And if you make a mistake, if you transfer incorrectly, you cannot ask back the money because to the bank that it was done a mistake. So make sure that you pay attention to who you are transferring the crypto, for example. And we spoke as well about the liberty of money. Whenever you have money in your bank account, they are not free money. They are money in a golden cage, basically, because you don't have the keys. The bank also can put stop on your bank account as well. So the actual free money is the money that you have in your crypto wallet, any kind of crypto wallet that is having a big adoption rate, like biggest blockchains, where you have a strong technology, and then you know that is actually yours. And you should use different kind of wallets, like cold wallets and hot wallets. You use hot wallets for trading, and you use cold wallets for storing, long-term storing. And you never use the long-term, the cold wallets for making transactions with third parties, like centralized crypto exchanges, like decentralized exchanges. You always use a hot wallet, because if you make a mistake, you don't make a mistake with the whole of your money, with whole of your cryptocurrencies.
That's interesting. Yes, and I think here a big part to add as well, guys, because we dived into the crypto world, but in terms of the free money, a good free money, let's say, also to keep in mind is anything physical. For example, gold or silver. Those are things that you can also store. Basically, the biggest change is whether you need to ask or click for any permission to anyone to get what is yours. It's like when you're a kid and you're asking your mom to pass you the cookie because it's in a cookie jar on top of the shelf. Well, it's not really your cookie if she needs to pass you every time you're asking for it. And it's the same here with our currency, for example, in a bank. And something that I wanted to point out, and this is a bit of a horrible story to mention, but it's true. I've read recently on one of the international newspapers about economy that there was a situation in China that a bank just deleted some of the accounts. That just happened. And what happens next? What do you do with that? As a one in the million, you can stand outside and scream, and maybe they will spray a pepper gas into your face, but you're not actually getting your money, are you? And you have no way to prove that it's yours. So, of course, we're living, hopefully, in the countries that are far from such a choice, but nevertheless, pay this in mind and think, where is your money stored and how free are you to use your money whenever you feel like it? So finally, I think before we give ourselves some 20 minutes or so, or 15 to discuss some topics, I wanted to ask you, Florin, to maybe encourage our listeners, and also I wanted to encourage you guys, myself, to reiterate, why is it better to try and fail and try again than not? And maybe here, you know, Florin, as a person of more experience than me, and with some experiences behind you in terms of trying it out for yourself, what would you say to us, to those who are going to listen to it in the future as well?
Well, think about that. If you don't take decisions, someone else will take the decision instead of your place. Basically, because it's not about having money, an issue. It's about you have money, but what you do with the money. Do you take the decision and you know how to do wise decisions to learn more about investments, and or you pass this responsibility to someone else, and then if that person is failing to deliver what that person said, you want someone else to blame. So basically, it's always important to become that kind of strong person that you take the decision, you try, you learn, you fail, you get up, you get up stronger, and you teach your kids to become real entrepreneurs from the beginning, because the world is changing. The school is teaching us to become good employees, but does not teach you to become good entrepreneurs. Why? Because the school teachers are just employees, and it's the best moment to learn from entrepreneurs that actually make the money, because they don't produce, they make the money, and then you will be more successful. Because nowadays it's important to become that kind of person that making the decision, but also you become that kind of influencer that you can do business with other people's money, because you understand more, because you see that kind of opportunity that is in front of you, and you can share the success with other people. I think sharing the success with other people is very important to be in your mind always, because helping other people to make money, it means that you also make money, because the money are the results of your actions. And you shouldn't start a business just because you want to make money. You should start a business because you want to add value to people, and then the money are the results of your actions.
Yeah, and that's really beautiful. You know, it's sort of I've read in one of the books, I think by Alan Watts, that money could be considered an energy that we exchange. It's like a bit of an exchange of I give to you something and you give me something else. And I think in any way, for it to flow, you need to make it flow. So a big part of what we've mentioned earlier, and I'm gonna make sure to also remind you guys to listen to the first and second episode, because they were quite powerful in terms of starting out. That a big part of what we're encouraging you to do as well is to give some of the money to people that need it even more. And here it's all about picking one another up, rather than allowing everyone else to fall as you're climbing the ladder of success on your own, because there's not much to climb if you're on your own, I think. And a big part about all of this is to not jump into the big water. I remember this quote, so I just wrote it down. Don't dip into the big water until you learn how to swim. Florian, you said that to me at the very beginning when we were discussing, and I think this is a big point to finish on with. You know, we're here to share with you some of the things that we find suitable and worthy, and take it and take as much as you want from it. Learn from your education as well, and explore, but do not jump into the biggest waters unless you're sure that at least you know what you're doing, because this is the big part, you know. It might feel scary to start, but if you start small, you're not gonna get burned so much. And that ultimately, I don't remember who was the person, but I heard also a quote that a person who does not save or does not invest with a little will not be able to invest with more. People say, oh, when I have 100,000, I'm going to give to charity. Well, if you're not giving right now, you're probably not going to give then. It's this sort of idea of starting small and getting into a habit. Oh, when I'm going to be that, I'm going to start this. Well, you better start right now, and then you can start talking.
Yes,
but
and as a legacy to my children, I would say, fight for your dream, and you make it sure that it becomes a reality, not because someone else wants to become a reality, it's because you want this and you want with all of your heart.
Thank you so much. And this is beautiful. This is, I guess, the moment for our listeners to join us. Let's have a little rendezvous, see what people are thinking. If you have any questions, any ideas, something that you would like to add to the conversation, let's explore this and let's see what happens. I think this was a really nice wrap up of what we've discussed.
I've got a question. You'll be surprised because it's completely not connected to the subject itself. But I was wondering, how do you spell fiat money?
F-I-A-T.
F-I-A-T, like the car.
Fiat.
Like the car Fiat, yeah.
Okay.
Yeah, basically, whenever you think about fiat, think about that in God we trust, in the government we trust, and if they print more money, it means that they screw us. And it's important to understand that we work for this paper. And it's important that you need to get rid of this paper as fast as possible, and you need to buy real assets such as gold, silver, property, assets, crypto, anything that have a real value, you know. Because as soon as you keep these assets, and because we are going to hyperinflation, what you buy in the morning you'll never buy in the evening. This was happening in Germany after in the Second World War. We are not far from this point, so it's important to realize that whatever you have now, start thinking about investments, start thinking about what can actually hold value, and look into the historical charts.
Yeah, that's okay.
Great. Kuba, Michał, anyone cooking out there? Any ideas, questions, suggestions?
Yeah, I just wanted to say that once again, great talk and good job on the whole workshop in general, because there was so much useful information. And I will definitely have to rewatch definitely the first 2 episodes, because you guys inspired me, and it just makes sense now, just to start investing. And I have a steady job now, and I know how much money I can save, so why not do something about it? So thank you for that.
I'm happy for you, Kuba, because I'm happy that I could add value to you to understand the difference between.
Yes, of course. I learned so much. It's crazy. Every single week that I attended, like, so much information.
Our
parents, thank you for that.
You're welcome. Our parents, because this is what society is teaching us to save, but this is counterintuitive to save if the government is printing more fiat money, what Tomek just talked about, and is devaluing the value of our currencies that we have in our pockets. So it's better to learn how you can compete with the inflation rate by learning how to make investments and how to take decisions, informed decisions, look at the charts, look at the fear and greed index. And I think this is important to become a trader, because you are young. The best job that you can have at the moment is to do this from a passion, and start learning as much as you can to become an active trader, because this is when you can have more ups and downs, but you learn faster because you fail faster. And it's important to learn with the small, like Wojtek said, and then when you feel confident that you can swim in bigger waters, then make the jump.
Yes, and I feel like this is a great invitation, and I know that some of us might not be yet old enough to use some of the instruments. But the thing is, it's good to start thinking about it early, and there is always a way. Because you can always ask someone trusted to do it for you. That's, I think, a big part of this journey for me has been to talk with my father about things that that for him have been a mystery for quite a while, and they might stay a mystery, but now with someone to talk to, we can sort of educate one another, and we can exchange the talk. And obviously, if I would not be 18 and above, I would be able to ask my father to invest for me, for example, my pocket money, let's say. Before we continue, I just wanted to confirm any sort of sign. Michael, is there anything at all you'd like to add or explore? I hope that you can still hear us. I can imagine that there is some cooking in the background. And
maybe they have the dinner. Everyone. Okay, at least they can put themselves like on video just to say hello and make a picture, a last final picture of this series, and we can wrap it up.
Yes, of course. So before we wrap it up, I just wanted to say I had a few conversations with some of my friends that participated, and I have this idea for. Of course, this is no commitment to anyone. This is my commitment to everyone, if anything, that I'm gonna start from not next week, but the week after, a bi-weekly, every 2 weeks. Meetings, just a quick meeting, a catch up, let's say, to try and help you guys register anything. So especially for those who are in UK, if you need any help, I've been through some parts of this already, or if you're in the EU and you can use some of the tools that UK can use, I'm happy for you to join me every 2 weeks or so, depending if people come. Of course, I'm not going to be sitting on my own on Zoom, but basically the initiative here is to teach you a little bit more while teaching myself. And every now and then, I think I'm going to be reaching out to Florin, and with his kind advice, I will be able to also, empower us a little bit further. So let's see how it goes. Feel free to let me know privately or on the group if you would like to attend, and we'll take it from there. And I guess other than that, let's take a little photo before
say
we
cheese.
wrap up. Just a second.
Big influencers team, yeah. Everyone influencer, yeah. Yay!
Wonderful. So one more, sorry, because that was my cat is biting me.
We need to
cheese.
Cheese.
Nice. Wonderful. Thank you so much, guys.
The best part. Thank you so much as well.
Thank you. Yeah. Thank you, guys. Thank you, Wojtek. Thank you for having me. And thank you for organizing this nice series. I really hope that I added value. And also I did this for a personal purpose because I want to leave a legacy to my children. This is also a legacy for them to see this in the future in order to change their mentality as well. So looking forward to see all of you big influencers. And also don't forget to add value. Don't forget to add value to everyone that you meet in your life, and build different clubs.
Yes, thank you, Florin. I mean, this was a huge thing, and I think a very beautiful initiative from your side as well. Thank you guys for sticking around with us. It's been a pleasure. Feel free to rewatch any of the content and feel free to reach out. You know where to find us. LinkedIn is probably the best space to approach us on. Other than that, have a beautiful evening, and may all the wealth be with you.
And wisdom. Take care, guys.
And wisdom.
Bye-bye.
Thank you.
Bye. Yeah, thank you.
Bye.